The sterling versus US dollar has been toying with its 100-day moving average over the last 5 separate trading days. Price has been trading above and below that key moving average, typically a level that a technical level that the markets react to, as opposed to trading up and down around. That suggests that the traders are unsure of the next shove for this currency pair. It's sort of hanging around the 100-day moving average, waiting for the next news that's going to push the price either higher or lower. I'll talk about the technicals that are driving this currency pair in this video, so that you can prepare for that roadmap, either higher or lower. So let's get started. This is a daily chart, and this is what I'm looking at here. The blue line represents a 100-day moving average, and it's been moving to the downside. And with the corrective move to the upside, that they finally the two shall meet, and they did last Thursday. And as you can see, each of the days over the last 5 days have seen the price trade above and below that moving average. There hasn't been much momentum to the upside, with the high price reached on Monday. On the downside, you can say that there hasn't been much move to the downside either. What is key on the downside, however, is that the price did hold support against the 38.2% retracement of this move down from the September high to the January low. That 38.2 came in at 1.2606, and you can see that how the price bounced against that level on, I guess that was be Monday and Tuesday. Each of those lows came down to that level, tested it, and rotated back to the upside. So that's good news for the buyers. The not so good news is that the momentum above the 100-day moving average has not been all that great either. But we are back above it, as you can see, in trading here today. Most of the price action in trading today has been above the 100-day moving average at 1.2646. So perhaps the buyers getting more comfortable in this pair. You can see more on the hourly chart here. Here is the price action above and below the 100-day moving average. This is 100-day moving average. Moved above it, fell. Moved above it, fell. Moved above it, fell. But most of the price action trade here today is above that moving average level. Also in play is the 100-hour moving average and the 200-hour moving average. Interestingly enough, the low price that we saw in trading yesterday not only held support near the 38.2% retracement of that move down from the September high to the January low, but also stalled against the rising 200-hour moving average. So again, that's a little bit more bullish, staying above the 38.2, staying above the 200-hour moving average. Going forward, the roadmap suggests to me that if we're going to go lower, we need to get below both the 200-hour moving average and the 38.2% retracement and stay below those levels to increase the bearish bias, have traders looking toward lower levels. Absent that, and the buyers are still in more control in the short, medium term, and maybe even the long term, but let's say short and medium term. And the sellers have to prove that they can take back control from those buyers. So that's my technical look and roadmap for this currency pair. It kind of sets the stage for what needs to be done to keep the buyers in control and what would increase the bearish bias. And that's what traders look to do. My name is Greg McCullough. Good fortune with your trading. Bye-bye now.